What's up everybody, Nate here. So the stock market in September ended the month in the red, losing basically all of the gains that it has gotten over the past year, and this was aided by the Federal Reserve raising interest rates aggressively and quickly once again. Inflation staying hot all throughout our economy. Meanwhile, the housing market and the jobs market are also starting to cool off. So it's really easy to see why the stock market ended the month in the negative, but this was a pretty big indication that a lot of investors were starting to get out of the stock market with fears of a global recession around the corner. But what's really interesting is that even though most of those factors really haven't changed month over month, the stock market in October has largely been positive. Sure, it's had its off days, but the average trajectory for the stock market is going up right now, and the stock market has actually had some of its biggest days over the last few weeks. So what exactly is going on here? Is this just a classic case of many investors buying the dip when the stock market was at its lowest point? Or is there something else kind of driving investor sentiment right now? Well, today I want to go over the three things that are kind of driving the stock market into the green right now, and I kind of want to show you how this is going to affect markets in the future and what we can expect for the rest of 2022. All right, so the first thing I want to talk about here is investor sentiment. Now, what you've got to remember is that when an investor buys a stock, they're not just betting on that particular company, they're actually investing in the future of the United States economy. They're betting that this company is going to continue to do well for a long period of time, especially the investors that are in it for the long haul. When we see the market go way up or go way down, that's basically investors telling you how they feel like the economy is going to be 3 and 6 months to a year. Now, obviously, there's a lot of things that drives the stock market, and there's a lot of things that drive individual companies, like their earnings reports, or if they're having some individual personnel changes. But the fact of the matter is, for the majority of the stock market, these stocks are going to be around for a very long time, and if investors want to hold on to these businesses for the extended future, then they have to know that they're going to get a big return on their money. So if they're buying big, that is an indication that investors feel like the next few months are going to be very good. Well, so what we can learn from September is that investors did not think that the stock market or the economy was going in the right direction. They felt like inflation was really high, and they felt like the Federal Reserve was raising its interest rates far too aggressively and quickly for their liking. Now, the Federal Reserve has been raising interest rates all year, and the stock market has been kind of adjusting because of that. They've been going up and down depending on what the Federal Reserve does. But what you've got to keep in mind here is that even though the Federal Reserve has been raising its interest rates all throughout 2022, they most recently moved their interest rates past the neutral level. So the neutral level in their eyes is around 2.5%. This is a pretty good rate for banks and financial institutions to borrow their money at and give this out to investors and consumers alike. But when it starts to go over that, that's when we start to have problems with growth and with spending in our economy. So with the Federal Reserve raising its interest rates really aggressively once again in September, a lot of investors did decide that they were getting out. And now in October, a lot of investors are buying the dip because that was one of the lowest periods of the entire year. So you were basically going to get a discount on a lot of these stocks on the New York Stock Exchange because the Federal Reserve was raising interest rates and the market was so low and undervalued. But why exactly does that mean the stock market is going up today? Well, I believe that the stock market has been slowly going up in October because a lot of investors kind of see this as their last chance to get some really big gains before the Federal Reserve moves their interest rates up even more. And I base this on kind of the numbers for inflation. So inflation is staying stubbornly steady in the United States, right around the 8% mark. And that is way higher than it should be. Now, in order for the Federal Reserve alone to bring this down, they have to raise their interest rates really, really high. But the fact of the matter is, the Federal Reserve raising its interest rates like this is not going to bring down inflation. Investors know this and businesses know this. So why does the Federal Reserve raise its interest rates anyway? Because that is its only monetary tool, right? They can only control interest rates and supply and demand of things in our economy. So they have to raise their interest rates. But in doing so, that is going to mean that businesses have a lot less expansion. Think about what raising interest rates really means. It just means that people are going to have a harder time accessing money through debt and other loans, like getting a mortgage or an auto loan, or investors taking on debt to invest in a business. They're not going to be able to do that as easily anymore. So while it's not going to directly bring down prices, i.e. bringing down inflation, it is going to mean that businesses don't don't grow as quickly, and the ones that are having some revenue and profit problems, they're going to have to figure out how to continue to be profitable, and that might mean cutting a lot of people, increasing unemployment, and with people not having a steady means of income, well, then they're not going to be able to go out and buy things, dropping demand in our economy. Federal funds rate is now well over the neutral level, so now it is in restrictive territory. So the stock market is kind of looking at this and realizing the Federal Reserve does not have a meeting in October, so they need to kind of pile in and try to get as much growth and as much gains out of the stocks that they have as possible before things really start to turn around. Because the Federal Reserve, in order to have an impact on prices, is going to have to create a lot more unemployment in our economy, which means rates are going to have to continue to spike month after month, basically for the rest of the year and into 2023. So like I said, that is bad news for these businesses, but right now things are still pretty steady with unemployment being at a near record low and consumer spending also pretty decent. So these businesses know that they can still make a profit in 2022, and investors know that these businesses are going to continue to do well for the next month or so until those rates go way back up. So they're going to want to continue to invest for now, but then I predict that they're going to get a lot more restrictive with their money come November and December. Now, the second thing that you have to keep in mind here is that we've had some really positive earnings reports over the last couple of weeks. Sure, we have seen some bad earnings reports, like Microsoft recently reported some lower than expected numbers, but we've also seen some really good earnings reports, like from some key banks like Bank of America and Goldman Sachs, and also from Netflix, which, if you remember at the beginning of the year, Netflix took a beating in their earnings. Now they are starting to turn things around. So with these earnings reports being really solid, that means that investors can kind of look at these stocks and realize that even though consumers have really high inflation, and even though raises haven't been that high for businesses, consumers are still going out and spending money, and that means businesses are going to continue to do well. Like I said though, that might not continue forever. Consumer sentiment is decent right now in the United States, but if that were to change and things were to flip, then that would mean that companies are not going to be getting as much revenue from consumers anymore, and they're going to start slipping. But like I said, that is not the case right now, and it's not the case as of last quarter. So investors are kind of seeing this as something that is going to be a gradual change month over month. According to Bank of America, savings accounts are not completely being depleted right now. Credit ratings are actually still really high, and Americans are still spending money at a pretty decent rate. So that shows that consumers are still willing to spend money where they need to. And the likelihood that from the last quarter to this quarter, we're going to see a significant drop in spending or in savings accounts or in credit is pretty unlikely. From Bank of America's perspective, this shows that Americans' financial health is still really strong because they haven't really had to dip into their savings, and they're not taking on a ton of new debt beyond what they've gotten over the last couple of years. And again, I anticipate that changing as we go into 2023 and inflation stays really high and it's really hard for consumers to buy things. But for right now, investors see this as something that is going to be a gradual change. In October, it's most likely not going to change. So they feel like they can invest in these companies, especially when they have their really strong earnings reports. And the next earnings reports for these companies might not be as strong. Even though we have the holidays coming up, they might show weaker than expected earnings because inflation is so high and the Fed is still raising its interest rates. So this is basically their last opportunity before 2023 earnings come out and these businesses start to slip. So investors want to put their money in before things kind of go south. And the third and final thing that you need to keep in mind here has to do with quarter four in general and spending for these companies. Now, one of the reasons why September is such a bad month for businesses and investors and the stock market in general is because September is seen as the time for businesses to finally create their final balance sheet for the entire year. They're trying to cut costs in order to make way for new money for spending. They want to put out heavy advertising for the holidays. This is their last chance to kind of cash in, and the holidays are one of the best times to do that for businesses. So September, businesses are really cutting their balance sheet a lot, and that can look really negative to investors because they believe that cutting all of this money all of a sudden, well, why exactly are you doing that? Is it because you don't have any money and you're trying to hold on? For the most part, that isn't really the issue. They're just trying to cut their costs. That way they have more money to spend during the holidays. October, though, is the start of Q4, so that's when all of that holiday spending comes out. We see more ad dollars dollars, and we see consumers starting to go out and buying things because of all of the deals. Not only that, but in September, businesses are adding to their inventory for the holidays coming up. So with that being said, Q4 is a time for spending. Investors know right now that consumers are going to be spending a ton of money in the coming months. So they know that these businesses for the next couple of months are probably going to be pretty strong because consumers are going to be buying things. Now here's where things are kind of different in 2022 though, because of things like inflation and the pandemic and a lot of supply chain issues throughout the entire globe. A lot of businesses have been extending holiday sales beyond just Q4. We've actually started to see a lot of discounts in September, and we're starting to see discounts right now. Usually we don't see massive discounts until late November. So what that means is consumers are going to be spending steadily over the next few months rather than just the last month and a half of Q4. Now what this kind of does from a sales and a marketing perspective is kind of deletes a lot of that urgency that a lot of consumers have, which means they don't really buy as much. That is one of the reasons why people spend so much money during the holidays, is because you're not really going to see these deals for another whole year. So you have to buy that product now because it's going to go back up in price. But with the sales kind of being extended for so long, now consumers feel like they have a lot more time to buy, and many of them just don't end up buying at all. So what exactly does that have to do with the stock market? Well, investors are kind of betting that a lot of consumers are going to get a lot of their holiday shopping done early this year, i.e. October. So that is what we're starting to see right now, and that is why investors are pouring their money into the market this month. Now, obviously things could go south over the next few months or just over the next few weeks. I anticipate another massive rate hike from the Federal Reserve, and that is going to mean that things are going to get a whole lot tougher for Americans and for businesses. And the higher those rates go, the higher unemployment is going to be. And remember, we're going into the holidays. So with businesses kind of expanding their inventory, if they don't have anybody to sell to because people don't have a big enough income to buy things, even though they're discounting things, well, then now they have all of this product that's already been paid for, meaning even bigger cuts into 2023. And most likely inflation is still going to stay pretty high in the United States. We still have really bad supply chain issues, and energy is still really hard to come by because of the war between Russia and Ukraine. So things are still really tough in the United States right now, and that means that the Fed is just going to have to continue to get more aggressive every single month. And like I said, we still have other markets that are in really bad disarray right now too, like the housing market and commodities and the cryptocurrency market. So investors are kind of seeing this as a big opportunity to get some last minute gains before things potentially go south in the future. And like I said, they're staying positive and betting big right now, but honestly that could switch on a dime. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it from me, everybody. Be kind out there, and I'll see you all in the next one.